And good morning, everyone. Marziti here with the Bullish Bears. We're going to start by having a look at what the overview of the markets are. Of course, we had the jobs report. It was a dud. uh, Lordy, lordy, lordy. Let's see. What else have we got? Have we got anything else today that could be? Jobs report was actually initial jobless claims up just a tiny amount, but continuing jobless in the same ballpark there. We do have services PMI final at 945, but it's important to understand this is a final, not a flash. The flash is typically the one that moves the market, and unless the final comes in really dramatically different than the initial one that came out, a week or two ago. Why is my screen flickering? um, unless the final comes out dramatically different, I don't expect to see much happen with that. We do see here that we also have at 10 o'clock ISM services. Now that one could be the one that moves us. Remember, as I say every day here, institutions have their move planned. Obviously, they're competitors, so they don't share it, but they do kind of have an understanding on which event of the day they're going to do something. And if they happen to coincidentally all be on the same side, the market takes off and runs. If it happens to be, though, that they are in conflict, then that's when we see a lot of whipping in the market. Goes up, goes down, goes up, goes down, that kind of thing. So it may be, I think, maybe the 10 o'clock one is going to be the one today that really moves us. All right, let's take a look. Let's start by looking over here at crude. The ADRs are tighter. The pivot points are tighter. I like that. I like that the IV is a little bit higher than normal. Well, a little bit. It's quite a bit. 0.54 over 0.45. So we've got a good 900ths, whatever. We'll say 9 ticks. How about that? Anyway, crude's a little bit more volatile here on the hourly. We are on the hourly right here. So let's take a look. We had a big push up, pull back, running up. That 50% move, just with what we see, let's go back just a little bit. Now, crude is running up because of the Middle East conflict. The Middle East is all about our oil. And so we did see a fair pullback. This pullback did not take out this here. As you can see, we're kind of going into this little chop here. It is volatile. We're seeing a lot of wicking right here. You see all these wicks on these candles, which is going to tell us this is going to be a scalper's area until they make a move and settle down. So this is going to be a scalper's area, even though the volatility is up in it. Taking a look here at the ES, pivot points are tighter, IV is higher. Again, we do like that as well. So that's good. When these pivot points are higher, that tells us that, if we do get a good breakout, it has a good tendency to run. Let's see. What did we do here? We've got this whole big consolidation zone right through here. A big consolidation zone. And so we need to mark that out and know that if we get into that area right there, that's going to be chop. And so we are actually kind of in that area right now. This is going to be chop. Here's the white as the pivot point. We did take out this pivot point support, and we did hit the ADR low, which is the half there. We've moved 70% of the ADR today. So, okay, what do I anticipate, we might do here? Let's just kind of look. Let's step back. We had a big pull up. We had this fair value gap. We did go into it somewhat. We did break down as expected. pull back in, break down again. So at this point, we see this big push here. It got rejected, but we haven't taken out the market high yet. So at this point, I don't see us going back north. I could be wrong. That 10 o'clock report could change everything. Remember, statistics are what they are, but news is going to move the market, and institutions are going to be the ones that move the market regardless of statistics. So we kind of always have to still look at the chart. So again, we've got this range right here, and until we get out of this range, again, it's going to be a scalper's kind of thing. I am expecting, what I would personally probably expect is to see us stay between these two ranges here, this pivot point and these two areas right here for the moment, until we get a good close. Again, I'm on the hourly, until we get a close above right here. Okay. Looking at gold, again on the hourly, coming down, a lot of chop, a lot of tossing. Looks a lot like the ES. You can see we had this big push up to the pivot point, strong rejection so far. To me, if this rejection holds through the hour, then, we're inside right now this big control candle. We did take a little liquidity to the south, but if we don't break above this candle here, then I'm going to say we're going to roll back to the south. Let's just kind of look at some other things here. Let's talk about the SPY gap trade, and then we'll go look at Edgeville and see what it says. So SPY closed right around here. Now, as we look to the right of this, we can see that we have gotten close to it, but to be honest, there is just no range. Look over here, you'll see that it's, let me just look over here on these numbers on the right as I put my crosshair on that close of the SPY, and as you can see, there's not even 50 cents. Well, no, wait a minute, excuse me. I'm sorry, there is $1, about $1.20. I stand corrected on that. We'll look at Edgeville, though. We're going to actually see, though, that it's only going to be a lower probability, and we kind of see that as we go more towards the end of the week, that the probability of closing that gap drops. But again, we've already come up towards it in the pre-market. I really, I don't have as much high expectation today. So if I were going to trade something today, what would I more than likely trade? I would probably come over here to gold and look at, with that strong rejection, I'm expecting probably a rollback south. Let's go down to the 15 though and just see if we can zoom in and get a little bit more of that picture. And here we are. So looking at the ES, okay, let's start with crude. Trending up, a lot of chop going on in the pre-market, and again, we need to get out of this zone. This is a box setup to me. I would see this right here as we've got a substantial high. We've got really this low right here. I would say as long as we stay in that box, we're not going to be just chopping around. I'd be looking for a close outside of that box followed by a continuation candle. Looking over here at the ES, liquidity run here did not take out this low. So that kind of shows us a bullish play because that, they tried to run the liquidity here, and the bull stepped in and said, no, you're not going to run our stops, and pushed them back out. So, but we have kind of come back to the middle of this range. So I don't like it right now because it's very choppy. I am kind of thinking here, so I'm more leaning towards gold right now. What I would probably do would be, again, let's back out and look. Well, again, we do have a box set up from here to about here. And so if we can, let's zoom in on that. So if we can get, oops, that's not quite right. Let's set it on this candle. So if we can get a close south of here at 2660.6, then we could say our really our best target route down here is going to be the ADR full down here at 2647-ish. So that's where I would be looking at gold as far as going short, but we need to get out of this range here right now. Okay, so there's my quick morning summary. Much like, Signets was pretty brief this morning, extremely brief. Let's go over and take a look at Edgeville real quick and just kind of see. Here we are with the stocks, price action, the gap fill on the SPY. We are in a gapping down situation. We are down. Let me just bring it in over here. Here we are. Here's the SPY close. We're down below that over here. I know it's hard for you guys to see, but you can obviously see down here at the SPY we're below. So that's a gap down. Edgeville says, though, that by weekday, looking at the last 6 months, in a gap down situation, we've only got a 50% chance of filling it. So you got to be very, very mindful of those kind of things there, because if that's going to be if you're looking to play this gap, you could look to maybe take some partial profits. In other words, instead of expecting it to fill 100%, you might say, well, if it fills 25%, the odds of that are a little bit better. The odds of 50%, not quite as good, but, so we will see, I think there's probably a good chance we'll get some of that gap closed at market open, but by how much, I don't know. So I'm not very excited about that this morning here. Let's go over to the futures and let's look at the orb strategy. New York session, I want to see the RTH open from 9:30 until 11 Eastern, which is generally our trading zone time for many of us, because the volume, quite frankly, drops substantially. Let's make sure we're looking, so we'll talk about the 15-minute. If we look at the 15-minute, we do see breakouts, only 7%, breakdowns, 35%, but double breaks are 57%. We do have a slight edge towards a breakdown based on the last 6 months. Now let's go back here and let's drill into that, and let's go to the last 3 months. And whoa, look at that. Double breaks, almost 85%, and practically no breakouts to the upside. That's kind of wow, wow. So we are kind of expecting that chop again here. That's interesting. Let's take a look at the Asian session. We'll go back and look at that. Tokyo versus New York, last 3 months. If Tokyo, we'll obviously need to go look at Tokyo here. If, well, let's just go ahead and do that so we can appreciate which report to go consider. So let's take this chart, let's maximize it. The Tokyo session is, and let me put us in a box. Tokyo session started at 8 p.m., so I think we're kind of already seeing what happened here. Goes until 2 a.m. So we can clearly see that Tokyo finished red. And of course, we did break south of that. Now, so since Tokyo finished red, what do we have here? According to Edgeville, Tokyo closed red. There is a 59% that the New York session will finish red as well. So not a very strong correlation there, but it is a little bit in our favor. Let's see, going previous close to close. If we go open to close, again, approximately the same results there. So we do have a bit of a 50-50. We look at the orb. They tell us that there's going to be a double break on the 30-minute, or no, the 15-minute, excuse me, that there's going to be a, you know what, let's go back and look at that orb on the 30-minute. And I want to, let's just see what it says there. By Thursday, orb, regular trading hour open. And we see not quite as strong of a double break on the 30-minute as opposed to the 15, but again, it's still, when we look at all of it, this is a crapshoot here today. But we do think that there's going to be a double break on the ES outside of that orb. Now, as far as how far does it go, let's go back to that 15-minute. Let's go to the performance of that double break, and we can definitely see here that the break is stronger to the downside. Definitely stronger to the downside. Remember, when we're talking about an orb, though, we're not talking about a wick necessarily. You can do the wick, but the safer answer is to wait for a close outside of the orb, and then the candle that follows continues the break. And that, for me, would be the entry candle. Also remember that when we talk about the orb, that doesn't mean that it won't, it can still come back inside the orb, the opening range, rather. When we talk about orbs, a lot of people think, well, it's not supposed to go back inside the opening range. No, that's not what it says. It says that it won't go to the other side. So in other words, if it breaks low, it can still come back to the middle, back inside the opening range. But, today we're seeing a double break is where the odds are. So in this situation here, wait for the continuation candle and don't count the wick. If it just wicks outside of the opening range and goes back into the opening range, that's not a break. A break is a close outside of the opening range, and then the candle continues the break, and that's your entry candle. As far as where your stops go, that's totally up to you on that. I would probably say, for me, 25. If it goes back inside the opening range by at least 25%, I'm out. Because there's a good chance it can go back to 50%. If it hits 25%, very strong chance, in my experience, that it'll come back into the middle of the opening range. And, that'd probably just be too much of a stop. Okay. So let's take a look now at, let's do today's Rorschach. And I posted this here. Now, the purpose of the Rorschach chart is to help you look at the chart and look for patterns, look for setups, things like that, to kind of expand your mind. I'm not saying that you have to trade everything. No. We're not saying you have to trade every pattern or every setup or whatever you see. It's more a matter of be aware of what it is telling you. So let's just go ahead and get started with this. Starting over here with crude. We saw this general, and I'm on the wrong color. No. White, give me white. We saw this general line, general trend up. We went into this chop here. So what did we do? We took out a low first, then we took out a high, then we rolled back in to this fair value gap. So watch for these kind of things. When we have an extreme move to one side, followed by an extreme move to the other side, we often see this move back to the middle. So a lot of times we can look for that half back move. Now it didn't come all the way half back, but it did make a move back towards the middle. Then it broke back north, took out this candle's high, and then that was a liquidity run. And when we see those liquidity runs, we are looking for a trade in the opposite direction, and there it was, blam. Now, what do we notice? It did not take out the previous low, lowest low. That's very bullish. And it rejected and it goes back up. So, what can we see with all this? Let me see if I can get all this mess out of here. Okay. So what do we see here? We saw we broke this trend, but in fact, we're actually still within that trend. Isn't that interesting? That if we were to have kept that support line or that trend line in there, we actually are still hitting it. We're still coming back into that channel. So never get rid of your trend lines until they just completely move away from them. All right? Notice that it did go towards the fair value gap. Now, a lot of times it typically does at least stick a toe into the fair value gap. This green candle here this time did not, but we do see that it moved towards it. So that's a play that you could say targeting the fair value gap. All right, looking at the ES. Again, we've got this trend line, these channels going on. So there's something you say, well, can you play channels? Well, yeah, you can. Matter of fact, if you go back and watch some of Jeremy's videos or talk to Jeremy when he streams today, as a matter of fact, he can talk about the standard deviation channel, where you could say you can play the bounce. For example, we hit here. What do we expect? If it's in this channel, then it's going to bounce down to here. Didn't quite make it. Bounce back up to here. Bounce back down to there until it, of course, breaks. So you can certainly look at these kind of, the nice thing about these kind of trades is that if you took this short here, your stop would go like right there based on this candle's high. So you've got a pretty tight stop. So there is a trading strategy. The same thing if you took these candles long, your stops would go just on the outside of this trend, outside this trend line, and then you could catch, assuming that your trend lines go back far enough. So the point being is that, yeah, you can play pinball with these trend lines. And if you like that kind of scalping or trading or whatever. We did set up a big fair value gap right here. We did come back into it. Now, in this case, we a lot of times we see these fair value gaps, and what we expect to do is to hit it and roll back over. But obviously that didn't happen. It went ahead and just moved on through it. So I'm not that huge of a fan so much of taking a trade from within a fair value gap anymore. You could have traded if you wanted to see this roll over south. You'd have to have put your stops right up in here. And, but as you can see, you might have gotten, you would have traded somewhere around in here, and then you would have gotten stopped out right about here. So, but again, I use fair value gaps more as targets. That seems to be the better play on it. What else can we see in this chart here? We do see that we did hit a pivot point. Let's back this out a little bit. Again, these white lines are pivot points. As you can see, we've hit them here. We hit it here. We came down to it here. As you can tell, we were coming down. So if you were short, that could have been a target. Are we going back up to gold? Let's just kind of zoom in on gold here. We've got this fair value gap right here. Let's just kind of extend that line. I can't 100% tell just by looking at this if we've hit it or not. Whoops. Go back over here. Let's see. Let me get my... I think we did touch it. It looks like we did. This candle right here did actually touch into it. So, you know, let's back up and look at what have we got here if we put our fib on from this area here to this area here. The middle would be about here, and we'd be looking for 50%. As you can see, we did hit 50%. That's a huge zone. That's a huge number. That is a huge number. And when there's a fair value gap also in that zone, that even adds to the magnet as far as price wanting to go back. That's the half back. Now, what is it going to do from there? I expect gold is probably going to go down from there. So again, what I'm trying to get you to see are all these different patterns, all these different, you know, be able to talk about it and be able to say, well, where is the trade in here? What are the possibilities? We see a fair value gap. We see the general trend is down. Over here, again, we see the general trend is down. Here on crude, we see the general trend is up. Your stronger play is always with the overall trend. Your stronger play is always with the overall trend. Always remember that. So the thing is, we have to look at a chart and we are looking for opportunities. We see fair value gaps. We see trends. We saw some channel plays. We saw some liquidity grabs where this candle here took out that candle's high. You know, maybe you've got MACD moving averages and things like that on there as well. All that is fine. The key point is that it doesn't matter, you know, what you're trading. You know, could you call this right here a demand zone? Yeah, I could call this a demand zone. Why? Because we had a huge rejection here based, you know, from what we see right there. That is a demand zone. So, you know, if it hits it and then it just chops around afterwards a little bit, that's not a demand zone necessarily. It is hits the demand zone and rejects, taking out prior highs and things like that. So, you know, if you're trading supply and demand, there is a demand. Would you call this a demand zone over here? Sure, here's the price. It came in, it hit it, strong rejection out of it. So, and then we see, what did it do? It came back into that demand zone and it cleared and it turned around in it. So there's you a supply and demand trade. Again, you know, Kevin and I were talking about this yesterday, And he says, well, you're not really expanding your chart out so that people can really see it. And I said, well, that's the point of the exercise, actually. I am not giving you a lot to work with here. I'm giving you what you got to work with is what you got. And you have to say, okay, what do I see with what I got? So again, some supply and demands. Could we call this a supply area up here? This was kind of weak. This didn't take out this. Maybe we could call that a supply area, but I would call it weak if we did. So it's not as strong as this demand area down here because we saw a really strong rejection that, came back out. Well, it didn't actually take it out, but anyway, we do see this result of where it did come back into it. Excuse me, I'm sorry. This one happened, followed by this, which took out all of that. So yeah, that could be considered a demand area. And then we came back down in here. Here's more evidence that this was a demand area because the price did turn around and go back up. Looks like a football chart, doesn't it? Quarterback goes left. Again, demand. Is this demand? No, not at this time. Why not? Well, we didn't, at this point, have we taken out, some kind of significant high yet? No, we haven't. So we have to wait for that to play out. Anybody got any questions about reading the charts and stuff like that? Okay. All righty then, with that. Again, folks, like I've said in the past here, I've used a lot of statistics from Edgeful. They give us a complimentary account that I like to show you guys. And we are not affiliated with them as far as any financial. Neither I've got the comp account. Yes, in that regard, I did get a comp account for us. But the Bullish Bears doesn't get anything out of this if you choose to go over and look at them. But if you like statistics, Edgeful is a neat place to go. And with that, yep, I think that's it. You guys have a good trading day. Like I say, we're still watching for that 10 o'clock report. Be mindful of that. And, just kind of watch the chat and see as we get closer to 10 o'clock. You guys have a good trading day. And remember, if you can't be good, at least be good at it. Marziti signing out.